Good morning, everyone. Can everyone hear me? Let's assume that you can. Yes, thank you. Some people typing in the comments on the left-hand side. Good morning, everyone. My name's Kate McMaster. I am the Learning and Development Manager here at ACFID. I'd like to welcome you all to this webinar this morning, which is on the DFAT Recognised Development Expenditure. We have some members of the team here from DFAT who are going to be presenting this morning, Kate, Glenn and Mairi, and we've got Peter as well from Sterling International who are going to be taking you through the webinar over the next hour and a half or so. So I'll hand over to them shortly. Just a reminder to you all that this webinar will be recorded, is being recorded, and it will be posted shortly on the ACFID YouTube channel, so you can access it any time for a reminder or share the link with your friends and colleagues. And you'll also be sent at the end of the webinar a link to an evaluation form to fill out in response to this webinar. So enjoy, and I'll pass over now to our DFAT colleagues.
Thank you so much, Kate. It's Mairi Horton here from the NGO Performance and Quality section from DFAT. Many familiar names on the attendance list there. Thank you so much for joining us today. So just to reintroduce the rest of the team members that I have with me here, I've got Glenn Williams, who's our System Administrator for ANCP Online, and also Kate Coffey from ANCP Operations team. And finally, Peter Turner from Sterling International, who some of you may have met through the accreditation or former RDE spot checks. And Sterling International are contracted by DFAT to assist us with recognised development expenditure, and I'll explain their role a little bit as we go through the slides and talk about the process of RDE. So some objectives for today. Obviously, we would love everyone to be able to report in their on their RDE that is due on the 31st of March and be able to report accurately and consistently across all NGOs to assist us to use RDE to calculate grant amounts. We'll come to that in a second. Also, so that we can explain to you today some of the key changes between the RDE methodology compared to last year and this year. So there has been a change to the RDE calculation method, really only a small change, and we're hoping that that won't be too much of a drama for anyone. And there's also some other changes in the RDE explanatory notes that we'll talk through as we go through. I've popped on the slide here the link to the RDE explanatory notes, and if you haven't read them already, I really recommend that you read them through. Might need to read them through a couple of times to be able to digest them. But the majority of what we're talking about today, what we're covering today, is contained within those RDE explanatory notes. So it's really, today is just an opportunity for us to talk through those explanatory notes. Next, we're hoping to give you some hints and tips and point out some of the common errors that Sterling usually find when they're doing the checks of the RDE submissions, the common things that pop up. We also want to be able to help you comply with ACFID requirements in the way that you report on your expenditure. We're going to explain about the process of RDE spot checks, and then we'll make sure we give you contact points at the end so that you can get some help or further advice on RDE between now and the 31st of March when the submissions are due. So we've got a full house for the webinar today. Everyone who has subscribed or who's signed up for the webinar today is an accredited NGO already. So we'll give that presentation on the basis that you're working towards your 31st of March ANCP submission rather than working towards an accreditation submission. And you're just welcome to please type in questions at any time as we go through the presentation today, and we'll try and answer your questions as we go through at that point where they're relevant. And of course, we'll just make sure that there's time for questions at the end as well. So please just type your questions in. I know that you can't see the questions that other people are typing, so when a question pops up, we'll read it out before we answer it so everyone knows what we're talking about. So let's hop straight into it. You'll see here on the screen RDE principles, and these RDE principles have this definition is taken straight from the RDE explanatory notes that were sent out to everyone on the 30th of January via email to all our ANCP NGOs, and they're also published on the ANCP website, on the DFAT website and the ANCP page. So there's been a slight rewording to the definition in that we now say that recognised development expenditure is the annual eligible expenditure of NGOs. So previously it referred to income, but really actually it's a measure of the expenditure that you have using funds that you've raised from the Australian community. And the next line talks about it being for your NGO's own development assistance, emergency relief and rehabilitation. So it's talking about those activities that you have control over and those activities that are development activities, not other types of charitable activities. And then it covers off that eligible contributions include cash, gifts in kind and volunteer services, and that 50% of that claim can be for gifts in kind and eligible services. As many of you already know, RDE is used principally for two things. One is to determine that you're still eligible for accreditation under the program, so minimum $50,000 for base NGOs and $100,000 for full NGOs. And then we also use it, of course, to calculate the grant amount that each full level accredited NGO will receive under the ANCP in line with the funding policy. What RDE doesn't do is tell us whether or not you're functioning effectively or about your financial viability. It really just is for those two purposes and above, for accreditation and for grant amounts. And it is just a tangible measure that all NGOs share so that we can fairly and equitably calculate your eligibility and grant amounts. You'll notice throughout the RDE explanatory notes, there is a lot of, I've just got a question, sorry, that's come in that someone can't hear the webinar, but they're still on hold. It's definitely not something that anyone else is experiencing. So if anyone has any suggestions as to what our listener might need to do to be able to hear, please feel free to type that into the comments and I'll relay that back to that computer. Yeah, just check your mute on your microphone. Yeah, they have hold music. So anyway, I'm going to move along. Oh, you can see other people's comments. That's fantastic. That makes it easier for questions. Great. So I'll just jumping back to the audited financial statements. You'll see throughout the RDE explanatory notes that there's a lot of reference to your audited financial statements and being able and needing to link what is in your RDE submission to your audited financial statements. And the reason that we do ask you to have those links there is because it provides the assurance that you are working from financial statements that have been independently audited by someone who's appropriately qualified to do so. We know then that it should be an accurate reflection of an agency's true financial situation and that you've complied with the ACFID Code of Conduct. And next, that it provides just greater transparency and consistency so that we know all NGOs are reporting in the same fashion. And finally, any as we said, any amounts in your RDE worksheet should clearly be reflected in your AFS, and if they're not, we ask that you attach a spreadsheet or a working document that shows how you made those adjustments or the reconciliation between any differences between the RDE worksheet and your audited financial statements. And as we move through the RDE form, we'll show you where you can attach that document, those working documents, to support your RDE submission. I've got a question here about someone having just a shorter financial year for only 9 months, and how do you report on that? I might ask Peter, our financial assessor, to answer that question specifically.
Yeah, look, what we would suggest you do there is you take that 9-month period and you add a quarter of the previous financial year's figures to it. So you would have already had an RDE calculation for the previous year during the full 12 months. One way to do it would be to take a quarter of those figures and add them to the 9-month figures. Now, there might be a little bit of a problem with timing of expenditure of grants, so I would suggest trying it that way, and if you don't feel the figures are correct, you can, there'll be an RDE hotline that you'll be able to ring. Okay.
I hope that answers your question, Cliff. Or Emma. It's Emma. So I'm going to move along just to give a summary of the RDE calculation method. So this formula is definitely one for the finance people, I think. We're starting this year with a slightly revised RDE explanatory notes that we start with eligible disbursements. The form will ask you to list all of your eligible disbursements and then list all of your deductions, and your total cash RDE will be your eligible disbursements minus your deductions. That will give you your total cash amount. Your non-cash RDE is then listed, broken down by gifts in kind and volunteer services. And then at the end, it tallies together your total RDE by taking your cash RDE plus your non-cash RDE, if your non-cash is less than or equal to your cash amount, and that'll give you your total RDE. It's complex. We'll go through it in more detail as we go through the slides. So as we mentioned right at the beginning, there are some changes to the RDE calculation method this year, and the change really is that there's a revised starting point. So in previous years, you've just listed in the first item in your RDE worksheet your total disbursements, so all expenses that you've had for activities per your audited financial statements. And then from that, we've deducted a whole range of ineligible expenses. I think previously there was around 7 ineligible expenses that were then deducted. This year, so from 2017 onwards, at the beginning we'll ask you to list your eligible disbursements only. So that specifically will be your funds to international programs, program support costs, and your community education disbursements. And then from that amount of eligible disbursements, we'll ask you to deduct your ineligible expenses. But there's only 4 of them this year. So that is the key change in the RDE calculation method. And many finance people in different organisations during accreditation and so forth have said that they've been using this revised method for a couple of years as a cross-check to the previous method. So some of you may be familiar with that method already. We're hoping to reduce the number of errors and actually simplify the process of filling out the forms. Often the ineligible expenses are the things where NGOs were wondering what to include and what not to include. So by having fewer deductions, it should hopefully reduce the number of errors and make it a little bit simpler for you all to complete. Now as we move through the RDE submission worksheet, we'll highlight these changes where they are, and I'll also talk about some of the other small changes that have been made in the RDE explanatory notes to definitions and so forth. So first, just a quick snapshot on your RDE submissions. We sent out an email to all ANCP contacts listed in our system, ANCP contacts 1 and 2, on the 30th of January. And it has all the information about RDE submissions being due this year. So they are due at 5 p.m. on Friday the 31st of March. There are links and so forth to the ANCP submission form in the email that was sent out. Unfortunately, we really cannot provide extensions past the 31st of March. DFAT needs your RDE calculations, and we need all NGO RDE calculations together and to be validated by Sterling International prior to the budget being handed down on budget night in early May. We need to have validated your amounts, and then we work as quickly as we can after budget night to calculate what your 2017-18 grant amount will be. And obviously, if we have any delays, that delays us being able to come out to all NGOs to let you know what your grant amount, or to all full NGOs anyway, to let you know what your grant amount is going to be 17-18, which is very essential for you guys to be able to have those dollar amounts ready to submit your ad plans at the end of June. So the round is now open. You're welcome to submit early. You can submit any time between now and 5 p.m. on Friday the 31st of March. And it is a contractual requirement under your grant agreements and funding orders that you do submit by Friday the 31st of March. And the ANCP team is monitoring ANCP online, and we're having a look who has started their submissions and who haven't started their submissions. So in the lead up to Friday the 31st of March, if we see that your NGO hasn't started a submission yet, we will pick up the phone and give you a call just to make sure that you've got all the information you need and that you're on track to have that submission in by Friday the 31st of March. There is a question now just about will there be any difference in RDE cash using the new method and the old method. And sorry, I should have said that. Sterling International did some modelling for us last year using the old RDE calculation method and the new calculation method, and there really should not be any difference in the total RDE figures that you arrive at using the old and the new method. Something you might like to do is go ahead and fill out your RDE submission using this new method, and then go back and have a look at the last year's submission using the old method, and use the old method as a cross-check for the new method that you've done this year. And then that might give you a steer as to whether or not you're in the right ballpark. But we're not anticipating that there will be any difference to people's total RDE. So let's skip ahead now to the RDE submission form. This is the login screen. When you click on the link in the email that we sent out, when you click on then start a new submission, you will arrive at this page. If you have previously logged on and previously used Smarty Grants before, you can use the login section that you see on the left-hand side of your screen there and just go ahead and put your email address and password in and log straight in. If you've never filled out an RDE submission form before, or you've not used or your organisation has not used Smarty Grants before and you need a new registration, you can use the section on the right-hand side of the screen. You'll see where I've highlighted in yellow on the slide there, where it says your name and organisation. We please ask that you actually put the name of your NGO in both the your name box and your organisation's name box. So please put your NGO's name in both of those boxes rather than your own personal name. That just helps us when we create our spreadsheets that it doesn't have John Smith or something listed there, that it actually has everyone's NGO name as we go through. Then when you open up your new form, this is what you will come to at first. So first will be your organisation's name from a drop-down box, and then it will ask you to put in the financial year the most recent financial year that you have and the date that that financial year ended. Obviously, in most cases, we're going to assume that it was the 12 months previous, but as we're talking about in the case before where you had a difference, then in the comments section that we'll come to at the end of the form, you can make notes if there's something different about this. We do ask here that you use your most recent audited financial statements. So even if that was more than 12 months ago, or if it's as long as they're your audited financial statements. So please don't base your RDE submission on unaudited drafts of your financial statements. They must be your most recent audited financial statements that your organisation holds. And then obviously in the accreditation type box, you can just select full or base. Then the first section, and this is the first area that we've had a key change from last year, we then ask you to include your eligible disbursements. So previously here at number 1, you would have just listed your total disbursements. So this year, we ask you to list your funds to international programs, your program support costs, and your community education costs. All of these, so 1A, 1B and 2, should be drawn directly from your audited financial statements, and they should correspond there. A note here though on community education costs. Disbursements to Australian community education costs are eligible to be included in your RDE, subject to them having met the requirements and the definitions that are in the ACFID Code of Conduct. So eligible community education costs include producing and distributing materials, conducting educational meetings, those type of things. Many NGOs often include community education costs in together with their marketing or fundraising costs, but unless they're segregated out in your audited financial statements, you can't include them here in your community education, and it means you're actually missing out on the opportunity to claim a little bit more on your RDE. So don't sell yourself short, and think about separating these out in your audited financial statements. There are some examples in the RDE explanatory notes where you have items or activities that you're doing that might have a dual purpose. So they might be, predominantly community education, but there's a small component of fundraising in there. The RDE explanatory notes gives you, an example as to how you might calculate the proportion of the costs that you're going to attribute to community education versus to other things like marketing or fundraising. Then in the ANCP online form, at item 3, total eligible disbursements, the form will automatically tally up 1A, 1B and 2 and pop a total in there in field 3, total eligible disbursements. Peter, did you want to add anything else there about some hints and tips on eligible disbursements?
Look, it is fairly straightforward. The figures should come directly from your ACFID format statement of income and expenditure. The definitions that are in the RDE explanatory notes are in line with the definitions that are in the ACFID Code of Conduct guidance, which you can access via the best practice toolkit on the ACFID website if you wanted to look at the details of them. So we're not expecting any errors, if you like, in these particular line items 1A, 1B or 2, because they should come directly from the audited financial statements. Mighty was mentioning with community education that some NGOs are not separating it from other types of expenditure, and I'm aware there's around 10 NGOs don't have any community education expenditure at all in their ACFID format income and expenditure statement. So that's an area that you can look at.
Good hits, maximising your RDE. So the next section of the form that you'll be taken through to is the deductions section. So the first section are disbursements that relate to funds that you've received from non-Australian community sources. So in the RDE definition, that we looked at right at the beginning, you'll remember it says that RDE is the annual eligible expenditure of each accredited NGO using contributions from the Australian community. So that's why we asked you now here to deduct your disbursements that are not related to Australian community funding sources. So the first of those obviously being any grants that you've received from DFAT, or any managing contracting fees or any other sources of income you've had from DFAT. Next to 4B, you should be removing Australian Commonwealth or state government departments or agencies that may have given you any funding, or any other Australian institutions that may have given you funding where their original source was an Australian government or state or territory government department. And finally, we ask also too that any other accredited NGOs that have provided funding that you've received from them, that you also deduct that, because those NGOs have already claimed that expenditure in their RDE. So that would be leading to it being double counted. And then finally, any funding that you've extended that has come from an overseas source, whether it's institutions or individual donors, that needs to be deducted here at 4C. One item to remember at 4A with DFAT funding, you should ensure there that you exclude DFAT funding that's used for domestic programs or administration costs. A note here, a question that we have received a few times from NGOs in relation to ad plans and how you list funding sources at the project level in your ad plan. I know I'm jumping out of RDE and going to ad plans, but a few NGOs have asked us if they receive funding from an Australian institution like an Australian corporation or an institutional donor, should that be included as part of your NGO matched funds, or should you be listing that as alternative funding source in the ad plan project form? And given that funds from Australian corporate donors or institutional donors can be counted towards your RDE, then we also consider it acceptable that you could count that as part of your NGO matched funds in your ad plan as part of your 20% match. We do ask though that where in your ad plans, where a corporate donor has specifically, or an institutional donor, sorry, has specifically nominated that those funds be put towards a particular project, that even though you're counting that as part of your match, you also list the name of that donor in the other donors section on the ad plan project form. I do hope that makes sense, and we'll make sure we go over that when we do the ad plan webinar in a few months' time. When I say the question there, just when I'm talking about accredited NGOs, talking both about full and base NGOs in relation to those ad plans. So whether you're full or you're base, you still have the requirement to have the 20% match for your grant amount in your ad plans. So moving on now to sorry, Peter, if I have cut you off. I'm sure you have many suggestions in terms of the deductions section and common errors and issues that are often found.
Look, with item 4A, DFAT funding, it has been possible in the past that some NGOs could spend all of their DFAT funding and the amount that they would put under item 4A would be equal, and the amount that they would put under item 4A would be equal to the amount of DFAT grant income that they were showing in their income and expenditure statement. That shouldn't be possible under the new method, because what should be happening with ANCP funds is with you using a portion of the funding for administration costs, you have to deduct that from the total DFAT funding to get your figure to put at item 4A. Under the old method, there was an adjustment for 10% of the DFAT funding, but it wasn't made at item 4A. It was made at an old item 5E under the old method, which that item doesn't exist anymore. So I just thought I'd point that out. With item 4B, it can sometimes be the case that all of the funding that you receive from other Australian government departments or accredited NGOs relate solely to international projects, and you've spent it all in the year, and so in that case the amount of the item 4B deduction will actually equal the amount of income from those organisations, which are usually shown separately in the ACFID format income and expenditure statement. That won't always be the case. It'll just depend whether you've spent all the funds or not. And with item 4C, in previous years under the old method, you would deduct all of the overseas funding at item 4C. Now you're just deducting the amount of overseas funding that was spent on international programs, program support or community education. So you don't include in item 4C any overseas funding of administration costs or domestic projects or fundraising.
Thanks, Peter. So in answer to the question, so 4A is actually DFAT funding minus admin and management costs.
Yes, there's a 10% allowance. You don't have to use it. There's a very small number of NGOs that don't actually use that 10%.
A very small number.
A very small number. The vast majority do use that 10% to cover administration costs. So those administration costs are shown separately in the ACFID format income and expenditure statement. So you then don't deduct the total DFAT funding at 4A because some of the expenditure relating to the DFAT funds is in a different cost category in your ACFID format financial statements. You only deduct at 4A AusAid funding that you spent on funds to international programs, program support or community education. That don't include in the 4A deduction any DFAT funding that you used for domestic programs or for administration costs.
I hope that is clarified. So I think hopefully we've answered the question again. What if you do use for program support costs? So we've got 10% automatically that everyone is using, virtually everyone is using for admin. You exclude that at item 4A. The RDE explanatory notes here do provide quite a bit of detail about 4A, 4B and 4C. So if you're still a little unclear, I'd suggest reading it. As you're reading it in the explanatory notes, it should hopefully be clear. And we'll give you some context at the end if you still need further clarification. So we're going to move on to then ineligible disbursements. So disbursements that are made to ineligible activities. And this is the area where in previous years we had sort of 7 items for deduction here, and this year it's just the 4 items for deduction because we're not starting with the total at the beginning, we're starting just with your eligible disbursements at point 1. I'm just going to jump back to the question that's there about how can we clarify how 4C is different to the previous 4C that appears to be the same.
The description is the same. What I'm saying is the figure that you have, it may be the same if you're using all of the overseas funding for international project activities, but if you're using a part of the overseas funding for domestic projects or fundraising or administration, the figure that you deduct it for, C, will be different to the figure that you would have deducted under the old method. So for a lot of NGOs, the figure will be the same because they only use overseas funding for international projects, but there are quite a number of NGOs that do use overseas sources of funds for fundraising or administration or domestic programs. And for those NGOs, the description of the line item is the same, but the amount that they'll deduct will be different from what they would have deducted under the old method.
Thank you. Okay, let's have a look now at section 5, ineligible disbursements. So let's have a little bit more detail on what some of these ineligible activities are and some definitions as we go along. I'm going to actually, before we move along, we'll just make sure that 4 has been clarified for everyone. So just that, that the 4A amount will be net of admin recovery.
Yes.
Yes. There we go. One finance person talking to another. The answer is yes. And Aaron, hopefully we'll come to your question on 5C just as we move down to 5C. So moving on to ineligible disbursements, the principle here is that RDE is for those disbursements that your organisation has made on development activities rather than other charitable activities that you might be involved with. So under welfare, religious and political activities, we've just updated the definitions a little bit in the RDE explanatory notes. So under political, you will see that the definition now also includes that activities that are in support of separatist movements cannot be included in your RDE, and that just brings the definitions in the RDE explanatory notes in line with the ANCP manual and the type of projects that we'll support under the ANCP manual. So just looking for some consistency there, and I'm doubtful that many of you are funding separatist movements anyway, so that shouldn't be an issue, hopefully. Next on religious activities, we have just updated the terminology here and called it religious activities, whereas previously I think it was evangelical activities. So just the terminology change there brings it into line with the ACFID Code of Conduct and terms used there. And we've also added in the disbursements to activities that build up religious structures, for example, infrastructure, training or organisational activities, are also ineligible for RDE unless those structures are specifically designed to provide non-denominational development or relief assistance. That again is consistent with the ANCP manual and what we expect to see funds used for under the ANCP manual. Next at item 5B, channeled funds, and 5B1 and 5B2, these are just disbursements that your NGO has no direct control or oversight of. And so going back to the principle that RDE is for your NGO's own development activities, not for someone else's development activities that you don't have that direct control and oversight of. I don't think that the definition has changed there at 5B compared to previous years. And next at 5C, this is funds sent to international or regional affiliates for administration, fundraising, promotion of the organisation. This includes administration costs for overseas country offices, which you'll need to deduct here following them having been included at line item 1A. So they would have been included there. That's why you need to deduct those administration costs for overseas country offices here. The advice from DFAT is that with all of these ineligible activities, if you're in doubt as to whether or not the activity is eligible for inclusion, either ask, and we'll provide the contact details at the end, or err on the side of caution and leave those activities out. If you're questioning, you're better to leave them out than to put them in. Peter, do you have any other tips and tricks for completing Section 5?
Yeah, well, with these items, you'll need to have a look at your project activities, analyse them, and assess whether there is expenditure that fits into any of these categories. And you're looking at the expenditure that's in your funds to international projects, program support costs, and community education. You're looking at expenditure within those three categories of your ACFID format income and expenditure statement, and you're looking to see whether any expenditure in those categories falls into 5A, 5B1, 5B2 or 5C descriptions. And this can only be done by analysing the list of projects, what you've spent money on, and assessing whether you have within that expenditure any of these categories. So if there is such expenditure and you have it in your RDE worksheet, we ask that you provide us with a reconciliation of what's included. So if you don't attach in Smarty Grants a list of, say if you have something in channel funds 5B1 and you don't attach a list, you'll receive an email from us asking if we can have a reconciliation of what's in there.
So at line item 6 then, that will automatically tally up the value of your deductions under those lines at 5. So then it will come to a page on Smarty Grants where it will automatically calculate your total eligible disbursements minus all of your deductions, and ANCP Online, Smarty Grants there, will automatically tally up this total cash RDE for you. The next section of the form then moves to your non-cash RDE. So firstly, lines 8 and 9 are the same as in previous years, and there's been just really only some very small changes in the RDE explanatory notes here around volunteer services and gifts in kind. A note is that your non-cash RDE items must be recorded in your audited financial statements to be eligible for inclusion in your RDE. The new RDE explanatory notes have some revised hourly rates for valuing volunteer hours. They've been revised this year compared to previous years. A note here is that you can't randomly assign a higher rate of pay because you have some specialist volunteers who in their professional life get paid at much higher rates. The rates of pay are provided in the RDE explanatory notes so that it's fair and equitable valuing of volunteer services across all NGOs. So that's really just for, fairness and transparency across everyone. And we do ask that where you're valuing volunteer contributions, that you do keep evidence for how you've arrived at those contributions. Not only is it as part of the RDE validation that Sterling might ask to see those, you may be asked to produce that supporting evidence for something like an audit if that's included in the future. A question here, Peter, about volunteer calculations. Do we include travel time in volunteer calculations or just their in-country hours?
That's a good question, and I've seen it treated different ways by different NGOs. We've never actually asked for a formal view, if you like, from DFAT on that. Look, I would say most NGOs use the in-country time, but not all. Some take the leave date and the return date from travel itineraries, because it's a matter too what they're doing in country, whether they are actually involved in project activities every day that they're there. So as I say, that I don't have a firm rule on it.
I would say, I mean, from a DFAT perspective here, we would probably, my initial recommendation would be to keep it consistent with what your organisation's travel policy is. So if you would pay your staff for the time that they are travelling, and that's considered work time for them when they're travelling, then I would have maybe apply those same conditions to your volunteers. But if you don't have a set policy on that, you might just want to be consistent and make sure that you're calculating something consistently and defensively for your organisation. So then when we move to then item 10, total non-cash RDE, again, Smarty Grants will automatically calculate line 8 plus line 9 and tally it in there at line 10. But you'll remember in the RDE principles that up to half of your eligible RDE can come from gifts in kind or eligible volunteer services. So a new field that we've included this year is field 11. So if your total non-cash RDE at line 10 is higher than your cash RDE at line 7, what you need to do at line 11 is re-enter your cash RDE amount. And so it then records that eligible amount of your non-cash that is going to be counted in your RDE total. Obviously, if your total non-cash amount at line 10 is less than your cash amount at line 7, you can just go ahead and re-enter your total non-cash amount here in field 11. I hope that makes sense, and I hope the explanation that's in the form also makes sense to explain that. But this is the way for us to record in the form that your non-cash has not exceeded your cash RDE. Please don't leave line 11 blank. It is a required field anyway. The form will prompt you to fill it in. But you'll see then as we move to line 12, your total cash RDE, what's going to happen here is the system is going to, at line 12, automatically take your total cash RDE at line 7 and add that together with your total eligible non-cash RDE at line 11 and spit out your total eligible RDE. There's then a box underneath here if you have any additional comments or information that just needed a short explanation, that you can then just pop that in the additional comments box here on Smarty Grants. So before we move on to just some of the administrative sections of the form, are there any further questions that anyone might have on non-cash RDE or how to complete the form at this stage? Okay, we'll move along to the next section. So the next section of the form is just where you need to upload the supporting statements that provide the evidence for everything that you've included in the RDE calculation section of the worksheet. So the first section will, great, we're going to jump back to section 4A and the exclusion of DFAT grant amounts. So if you, no, please don't apologise for asking again, it's better to ask now. So in section 4A, I'm going to go back to the slides of 4A. Just to clarify here, if you're one of the NGOs that automatically takes 10% out of your ACFID grant and puts that towards administration costs, you should exclude that 10% for admin costs here at 4A. Do not include it. So if you are a base NGO and you receive $150,000, you automatically take $15,000 out for admin. The amount, and that's the only DFAT grant that you receive, the ACFID one, you would record here at 4A $135,000.
Provided you'd spent the grant.
Provided you had spent all of the grant in that financial year. Peter's very true. Yeah. I hope we've clarified. question here might be a good one for you, Peter, about can the entire form be checked against the total disbursements to ensure everything adds up? So I think maybe here would you be better off to go back to the previous RDE form and actually use that old previous method as your cross-check by doing not only the total disbursements but also all of the previous deductions as well, and that would give you the cross-check.
Yes, it'll give you the cross-check. What you've got to remember though is some of the line items will have a different deduction under the two methods, such as the example where if you're using the overseas funding for domestic programs and administration, item 4C deduction will be different under the old method and the new method. So you can go back and use the old method as a cross-check, but you just need to remember that even though the line items have the same description, a number of them will be different figures under the two methods. But if you do it correctly, you'll end up with the same total cash RDE under the two different methods.
So use the whole previous form. Okay, I'm going to move along to the section where you can upload your audited financial statements and annual report. It is a requirement that you attach your audited financial statements to your RDE worksheet, and you can do this in two ways. At the drop-down box that you see there under audited after annual financial statements, you can select whether or not you're going to upload a file or whether or not you want to type a URL in. So just select that first, and then you'll see the grayed out section, depending on what you've selected there, will then either allow you to go through and choose a file to upload, or it will open up the box so you can type a URL in for where your audited financial statements might be on your website. The same applies for your annual report. You just select whether or not you want to attach a file or whether or not you want to pop a URL in, and then go ahead and upload that information. Finally, at the bottom of this form, you will see now that if you have any working documents or calculation worksheets that you might need to provide to give explanation as to why there's any differentiation between audited financial statements and your RDE worksheet, this is the appropriate place where you can attach that. So it's not a requirement to attach that if you don't have any deviations that you need to explain. But if you've got anything that needs reconciling between your RDE submission and your AFS, then please upload a file here to explain those two differences, and that will prevent Sterling having to come back to you and ask for all of those explanations as they go through and do the financial validations on your RDE. Peter, do you have any hints for what format or anything that might like to be, NGOs might like to show that in?
Look, when we do obtain the reconciliations and explanations, it's generally adequate. Sometimes we have to go back with further queries. But we have had, in the last couple of years, we've had a number of NGOs which have quite a lot of figures that differ to figures in the financial statements, and they haven't provided any additional reconciliations. It just slows us down if you have the documents, which you must have in order to be able to complete the worksheet. We just request that you do actually attach them to the Smarty Grants when you lodge the RDE worksheet. It just saves us an extra step in the process.
So the next section of the form is where you include the contact details, and here is where you should provide the contact details for probably the person who has done the majority of the work in completing the RDE submission, the subject matter expert who is going to be able to speak to these finances and the inclusions in your form, in your RDE submission form. It may well be a different person than you've identified as your ANCP contact in your ad plan, and that's fine. We do ask that this officer should be generally contactable during April, so that as Sterling are going through and doing the validations of the RDE, that if they've got any questions or they need any additional information, they can contact that person. So don't pop someone in if they're going to be on a beach somewhere for the entire of April. They might not be the best point of contact. Next then, don't forget to download the authorisation template. You'll see on the form it says the authorisation template is available here. You can click there to download that Word document and have your authorised officer and your chief executive officer sign and date that form, and then scan it in and upload it there in the section where it asks you to halfway down the form. I'm going to ask Peter just to go through some of the common issues and errors that are often found when Sterling reviewing and validating all of your RDE submissions. Reviewing and validating all of your RDE submissions.
The first one on the list here is fairly straightforward. Heidi was saying before to use your organisation name when you're completing the form in Smarty Grants. Otherwise, if you use your own personal name, we can't tell who the worksheet belongs to. We always have issues with RDE figures not being traceable to the audited financial statements and no worksheets being loaded into Smarty Grants so that we can see how they reconcile to the audited financial statements. But I know that's not going to occur this year because you're all going to attach working documents and reconciliations. So they're previous year problems. We know they're not going to occur anymore. If the audited financial statements are unaudited drafts, we can't accept them. We do occasionally have the situation where a newly accredited NGO happens to have a December year end and they can't quite make 31st of March for a deadline. So we've allowed a little bit of leeway for those instances, but I'm not sure there's any of those this year. There was one I was thinking of a couple of years ago. We're quite late, but we gave them a little bit of leeway. It shouldn't be a problem for any NGO other than an NGO with a December year end. We realise that it is fairly tight, but most of the December year ends manage to get their accounts audited by the end of March. And the final point on this slide, volunteer services or gifts in kind not being recorded in the audited financial statements, we can't accept them if they're not in the audited financial statements. That doesn't happen very often. Moving on to the next slide. Audited financial statements not complying with the ACFID Code of Conduct template. This, of course, doesn't happen very often because most NGOs have been accredited for some time and are very familiar with the ACFID format income and expenditure statement. We do find problems sometimes with newly accredited NGOs. Can sometimes take them a year or so to get their accounts into exactly into ACFID compliant format. Inclusion of ineligible disbursements we come across reasonably often when we're having a look behind the figures. So all that I can do there is ask you to look closely at the definitions of the various deduction items in the RDE worksheet, just to make sure that you are identifying all of the different types of expenditure that need to be deducted in the process. We have had a number of instances of the 10% administration component of the ANCP funding not being properly accounted for in the RDE worksheet. Previously, most NGOs had that 10% adjustment in item 5E, I think it was, which no longer exists, but it's now under item 4A. So hopefully the RDE explanatory notes are clear enough. We've stated it quite clearly in there so that you won't miss it. So we're hoping that's not an issue in the future. Inclusion of ineligible projects in the RDE calculations for welfare, political and religious activities and channeled funds. All I can say is you should read the guidance that is in the RDE explanatory notes, and then review your expenditure going through the international funds to international projects to see if you can identify any of these funds. And most of the accredited NGOs that have been part of the system for a number of years have a system for doing this. And we only usually find an issue with newly accredited NGOs that haven't been going through this process. And the final dot point on this slide, it does cause us a little bit of grief if we get a number of NGOs that aren't able to have someone available to answer our queries. One or two we can handle with. If we get a whole, as sometimes happens, if we get a whole large number of NGOs that we're waiting on responses from because appropriate people aren't available, it does cause us a little bit of grief. So it'd be good if the author of the RDE worksheet can be available in early April. That would be helpful.
We'll just go through the process a little bit for RDE spot checks, and many of your organisations have probably participated in one in the past. The process is after we receive your submission on the 31st of March, DFAT has contracted Sterling International to validate all of the RDE submissions, and they go through those submissions and work with you to clarify anything that might need updating and make adjustments to your RDE submission as needed. Following that, Sterling and DFAT work together to identify NGOs that will be selected for a spot check in 2017. This year we'll be identifying 7 NGOs for a spot check, and it might be base or full NGOs that are subject to a spot check. So it's not only for one group or another. The spot checks are usually undertaken in June or July, and Sterling will get in touch directly. So DFAT will advise the NGOs that have been identified for a spot check, and then after that Sterling will get in touch with you to arrange the logistics and so forth for the spot check directly with you. They will provide a minimum of 10 days notice for the spot check occurring. And it happens in 2 parts, the first being a desk-based review of all of the paperwork that you've submitted and so forth. And then the following that, there'll be a 1-day site visit at your offices working with your finance staff for the spot check to happen. Within 5 days, Sterling will prepare a report that will come to your NGO, and you'll have the opportunity to clarify any areas of fact or so forth and work with Sterling on that. And then within 15 days of that site visit occurring, Sterling provide a report to DFAT with the outcomes of the RDE. I'm just going to get, so Peter, as one of our financial assessors for both accreditation and RDE validation and RDE spot checks, I'm just going to get him to talk through briefly about the agenda for that day. When they come out and do the RDE 1-day site visit with your NGO, about how that sort of day might be conducted by Sterling.
Well, before we come, we'll have a discussion with the person that's been nominated as our contact person, and we'll usually send an email saying what information we already have, which will be the information that's been lodged in Smarty grants and any information that's been provided to us when we've done our desk review in early April, and we'll also outline any further information that we'd like to look at when we come to the spot check. And we normally have a meeting when we first arrive to talk about what we're going to do during the day, which can vary depending on what information we have and what information we're yet to look at. It sometimes doesn't take the whole day, it can sometimes be a couple of hours. It just depends how much information we already have from our desk review and information that's already been provided to us. a maximum of a day we'll be there, and we'll have an interview at the end of the day just to say what the issues are, if any, that have come up during the spot check. If there aren't any issues, we'll say there's no issues. As an indication, in the last 3 years, we would have done a total of 15 spot checks. I think we've ended up with around 4 or 5 of those spot checks requiring an adjustment to be made to the RDE. There are a number of things that we look at during an RDE spot check that we can't look at when we're doing the desk review in early April. We're really going behind the numbers when we come out to do a spot check, and so we'll be wanting to go back and reconcile figures to your general ledger to see that it ties up with your general ledger at the end of the relevant period. And we might want to have a look in detail at what activities are going on with a sample of projects that are included in your RDE. We can't do that in the desk audit. We can only do that when we go out for the spot check. We'll have the RDE worksheet and the supporting audited financial statements. They will have been lodged in Smarty Grants, so we'll have those and we'll have reviewed them before we come for the spot check. We'll want to look at the details of the valuation of volunteer services and gifts in kind. So we'll be looking at what time records you have. Be they, some NGOs have formal timesheet systems for their volunteers, not many, but some do. Some use itineraries for in-country travel. Whatever you're using, we'll want to look at what records you have to support the time that you're claiming for the volunteers, and we'll also look at what rates you're using to value their time. And generally, most NGOs are using the rates that are in the RDE explanatory notes. So we're wanting to check that, and we'll be wanting to look at what documentation you have to support the gifts in kind, both their value and to verify that the goods in kind have actually been sent overseas, because they're not eligible unless they have been sent overseas. So we'll look at that. Checking the RDE worksheet against the NGO's records is the process of being able to reconcile figures back to the general ledger and to look at reconciliations that you have for RDE worksheet items that don't tie directly to financial statements, things like channel funds and welfare. You won't find in the financial statements, but we'll expect to see that you've had a reconciliation where you've identified all of those particular projects and all of those channel funds. And you may need to look at some supporting documentation underlying some of the items. But we'll let you know before we come for the spot check exactly what we'll be wanting to look at. What we do sometimes find when we're having a bit of a look is we're always wanting to see that amounts that you're putting into the different expenditure categories in your audited financial statements are in accordance with the ACFID Code of Conduct definitions for different income statement items. Something we've noticed in recent years is sometimes some NGOs have been allocating a portion of their administration costs into program support, and that's not in accordance with the ACFID Code of Conduct definitions for administration costs and program support. So that's something that we'll be looking at when we come to do RDE spot checks. We'll be looking at what's in your program support costs to check that you're not including administration overheads that should be administration rather than program support. Some common issues that we have during RDE spot checks. Administration costs incorrectly included in eligible expenditure, which I've just mentioned. Insufficient segregation of fundraising from community education costs. Mighty did mention that earlier on in the webinar, that quite a lot of NGOs including their community education within marketing expenses and not splitting it out and perhaps missing out on something that might be eligible. And quite often we find that they are together, haven't been split, and have to give some advice to an NGO as to how to do it. We're quite happy to do that during the spot check. Lack of attention to ACFID Code of Conduct Good Practice Toolkit and RDE explanatory notes. We sometimes find errors and wonder if people have read the explanatory notes because they do something that directly contradicts the explanatory notes. So I would encourage people to read the RDE explanatory notes, go right through them to be sure that you are treating things correctly. We don't want to have to turn up and say, well, this is in accordance with the notes. We prefer that you pick it up before you make a submission. The final point there on common issues, unavailability of key personnel. We have had instances where we've had to wait 4 or 5 weeks for people to be available, and we can do it, but it just means we have trouble meeting our guidelines for reporting to DFAT if we have to wait for a period of time. So it's helpful that if people that have been involved in the RDE calculations are available in June. That's the time that we generally schedule the RDE spot checks to occur. But if not, we're always willing to wait.
Thanks, Peter. So, I mean, just to note, the spot checks, they're not an audit, but they can be a really great learning opportunity for your organisation to do your RDE better. And oftentimes after a spot check, we've found too that it's not that an NGO's RDE needs to be reduced. Oftentimes they've actually sort of been, you've been selling yourselves short, and we've actually, Sterling have been able to find other eligible inclusions that you can put towards your RDE and increase your RDE. So it can be a great opportunity as well. So that does bring us to the end of the presentation and the webinar that we've prepared today. So there's definitely a few more minutes if anyone has any final questions. Got a question here, Glenn. This is definitely a Smarty Grants question, that if you can't see an RDE worksheet in your online account and
you're using the wrong URL. You need to refer to the ANCP emails that they've sent you, and it is a different URL than the ANCP ad plan URL that you use. So it'll be something along the lines of dfat@smartygrants.com.au/RDE 2017, but don't hold me to that. Yeah, just check their last bulletin. It's guaranteed it's got the correct email address in there.
I'll just click back to the slide for you. If you hold with me, we'll click back to the slide that has the URL for ANCP NGOs to submit it, and it's there, https://ancp.smartygrants.com.au/RDE 2017. So you've got to go through there. You can't go through the normal spot you go through to do your ad plans.
That's correct. Where you'd find your ad plans would be at ancp.smartygrants.com.au. If you logged in there, you just see anything you've submitted previously, but you must put on the /RDE 2017 to get to the new RDE submission sheet.
Hop back to the final sheet. Still time for questions, sorry. So this year, just because we have changed the RDE calculation method and updated the RDE explanatory notes, we are making, just for this year only, we've asked Sterling to provide an RDE helpline, we've called it, so that if you have any specific technical financial questions, you can phone Sterling on Mondays in March in the lead up to your submission being due on the 31st, so that's the 6th, the 13th, the 20th and the 27th of March, between 10 AM and 12 noon. The phone number's there, 02 8268 8169. We included those details in the email that we sent out on the 30th of January advising that the RDE round is open. So next month on Mondays, you can phone Roger and Peter at Sterling, and they can provide you technical financial advice if you need it to assist in completing your RDE this year. So that is for this year only. We probably won't do that in future years. And then, of course, the ANCP team at DFAT is always available during business hours to answer your questions. We may not hold the specific technical knowledge, but we'll pass you on to Sterling if we can't answer your question. But if it's a Smarty Grants related question or a sort of general question about the RDE explanatory notes, we can hopefully help you. We're always there during business hours on 02 6178 5888. And in relation to the question about can we send out a copy of the slides from this webinar, we absolutely can. We will add them to our bulletin, the next ANCP bulletin that we will send out to ANCP contacts number 1 and 2. So if you can share those with your financial colleagues, that would be great. And as Kate from ACFID said at the beginning of the presentation too, ACFID will publish a recording of this webinar to their YouTube channel in the coming days, and we will also send the URL for the YouTube channel link out to ANCP contacts 1 and 2 in the coming weeks. So if there aren't any further questions that you wanted to go through now, then we will wrap up this session. Thank you all so much for joining us for this session. It's been the first time that we've had a fully subscribed webinar. We're very excited that it was for the topic of RDE. A reminder, your RDE submissions are due on the 31st of March. We're really sorry that we can't grant any extensions to that, so please do have your submissions ready to go by the 31st. I'd really like to thank ACFID for hosting us again for this webinar and the entire series of DFAT webinars that will be presented over the course of the coming months. And we look forward to catching up with you either in those webinars in the future or in our face-to-face sessions that will be coming up in April. Thank you all so much, guys. It's been great. We'll talk soon.